Welcome back to Morning Markets on Monday the 14th of March. On screen we can see the key market moves from Friday. It was pleasing in the UK to see some positive returns wash through the markets with single stock names such as Pearson Education, which jumped 18% on the day. That puts it 8% of the UK index over the last 2 years after they knocked back a bid of £7 billion for the company. The company, under the lead of their new CEO, has been on a venture of cost-cutting and online platform integration to modernise the primarily textbook-based business model. The board believed that the offer did not offer a fair valuation for the future plans of the business and the growth expectations. But this is another example, another case study of international private equity having keen interest in the UK market at this point in time. In addition to single names, the hospitality industry, primarily airlines and hotels, received a positive return on the day after we saw progressive talks between Russia and Ukraine develop, and also given the publication of some strong economic growth reports. The situation in Ukraine continues to evolve, and over the weekend we saw the tragic developments which intensified over the weekend. In the US, we received some slightly softer consumer sentiment data. The preliminary estimates showed that the index moved from 62.8 in February to 59.7 in March. It's the lowest reading since November 2011, and it's really driven at this point in time, as you may expect, by inflation expectations which are rising on the back of higher energy prices. On the day, the stock market in the US was slightly lower, down 1.3% on the S&P 500. The technology and consumer discretionary focused index, being the Nasdaq, was off slightly more, it was off around 2.2%. On the day, we also saw bond yields rise, so financing costs increased. We did see some investors take some shelter in longer dated bonds, so 30-year bonds plus. As we look towards the week ahead, the situation between Russia and Ukraine will be of key focus. We also have a number of important central bank meetings to focus on as well. On Wednesday, we have the US Federal Reserve meeting. They are expected to push on with their interest rate hike trajectory, so they're expected to raise interest rates by 0.25%. So this will be the first rate hike since 2018. We'll also see developments around their plans for tapering their balance sheet. So their balance sheet has increased, it's more than doubled since the onset of the pandemic to over $9 trillion. And that was really on the back of the bond purchase program which we went through in the pandemic to support liquidity and financial conditions. It linked with the development around the tapering plans. We'll also see the revision to their economic growth and inflation expectations. We'll also hear later in the week from the Bank of England's Monetary Policy Committee, who are also expected to push on with interest rate hikes, increasing another 0.25%, which will bring borrowing costs back to pre-pandemic levels of 0.75%. But again, it'll be important to see the revisions to their economic growth and inflation expectations. The Bank of Japan are expected to leave monetary policy broadly unchanged at this point in time. They are not facing the same inflationary pressures as we're facing here in the West. They still have inflation below that long-term target of 2%, but we may see an economic growth revision. And in China tightened monetary policy much sooner than we did in the West, and we are therefore past peak tightening, and we are seeing easing in terms of monetary policy in China. So we're expected to see loan growth costs to moderate once again in the latter part of this week. As always, please do tune in to Morning Markets through the week. We look forward to bringing you up to date with all of these developments. We'll speak to you tomorrow. Thank you very much.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.